letters.
The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good afternoon, folks. Excuse me. Welcome to the March 30th, the magical Monday edition of today's Trader's Edge show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Hey, let's make sure we have an extraordinary one. And the easiest way to do that is to always remember that life is happening for us, not to us. That's right. When you and I can make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Now, today, you and I, we're going to go check on the circumstance of these markets. We're going to go figure out what those bulls and bears, what those buyers and sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, but more importantly than that, during this next 60 minutes, I'm here to serve you. So feel free to pick up that phone. You can dial on in at 877-927-6648. If you can't dial in, we've got you covered. You can always let those fingers do the walking. You can send me an email, steve@tfnn.com. Please put radio show question in that subject heading, and, of course, in our Tiger's Den. Well, any ping will do. So let's go ahead and get this show started on Magical, Magnificent Monday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to Last Show. Right now, we got all the indices in the green. Dow's up 452 points, 2%. There used to be a day where we'd say it's up 450 points and think that, man, the market is just simply headed off to the races. Not so fast. We can't get caught up in the numbers. Instead, we've got to take a look at support and resistance and see what the market is communicating to you and I. And certainly, we're going to go ahead and do that here this afternoon. The S&P's up 59 points. That's 2.75% out there. The dollar, percentage-wise, to the upside, it is the semis. They're the ones having the largest swings to the upside. To the downside, they're up 3% right now, trading out at 1534. Spot volatility index is down by over 10%. Now, you'll want to, the one-day rate of change, 10%. It's minus 10.13. So I'm going to suggest that we keep an eye on that at today's close. Typically, we're not in typical markets, but typically, when the spot volatility index has a one-day rate of change less than minus 10%, so below minus 10%, it's a signal of an initiation move to higher price out there. So we'll take a look at that too. Gold is off $14. Silver down 38 cents. That's nearly 3% to the downside. Light sweet crude down nearly 6%, trading out at 2027. Natural gas, well, we need to change that. It's not the it's not the April contract. So give me a second here. Let's get that corrected. Give me one moment. So you got it down just slightly, trading out at $1.66. Treasury bonds up nearly 3 points, 2 and 27/32 out there on the 30-year, trading out at 181.28. All right, so let's go take a look at support and resistance, short-term support and resistance, to get a feel for what the markets are doing out here. So we'll just pull over this chart. This is a chart that subscribers are kind of getting used to, I think. Well, one, it lets them know about the opening range, and that assists them in overnight trading, understanding what the markets are doing. Last night was a perfect example. It wasn't just the gap down. It was really what transpired during the first 30 minutes. Being able to just simply draw a line, these little thin black lines that you see on this chart out here, those are representing the opening range bar of the equity futures contract. So it's going to never change. It's going to be 6 p.m. to 6:30. And you want to understand where those range levels are, because if you start seeing it close below the bottom of that opening range, you better be able to figure out where support is. We do it here automatically. Just let the system figure that out for us. And if it starts trading above the top of the opening range, then you got to figure out where resistance is. Now, Resistance are these green, the solid green lines that you see at the top of the top of each of the quadrants. So we're looking at the ES, the NQ, the Dow, and the Russell 2000 out here. Right now, you can see that the ES Mini is trading above resistance. That was at 25.8125. We see the same thing here in the NQ. So that would mean we should celebrate, doesn't it? Heck no, it doesn't mean that at all. You need all cylinders firing off at the same time out here. And we don't have that. We absolutely do not have that. Yeah, nice dollar move inside the Dow, but is the Dow taking out resistance? And is it resistance? Heavens to Betsy, whoever Betsy is, yes. The number is 22,143. We can come back to last week. We take a look at, so right now, so first, when we take a look at resistance at 22,143, just take a look at the current bar. We're below that level. It's never a good deal. It's never a good deal. Did I say it's never a good deal? It's never a good deal when the Dow isn't confirming the move in the market out here. I know somebody is saying, what the heck are you talking about, Steve? What do you mean? Here, I'll just give you a simple what I mean, jelly bean. I mean, go figure out when the Dow topped here most recently, and you tell me, did it top out before the S&P and the NASDAQ? You can go back to 2007 and do the same routine out there. You can go back to 2000 and do the same routine. You can go back to most any other bear market out there. And which indice is it that it typically tops out first? Well, you'll go figure that out. And maybe that's a reason why I'm saying, look, don't get caught up in the numbers out here. Instead, what I want you to do is get caught up in understanding where support and resistance is. Now, these TD9 levels that are automatically generated by my system out here, it's easy for you to do the same. It's easy for you to understand the rules. I've got a workshop on my in the archive section of my for newsletter subscribers. TFNN is being kind enough to let people try this, for 30 days. So go use that, even if it's just for 29 days out there, to understand this and see what it would do for your trading, or at least being able to interpret what the markets are communicating to us. In the case of the Russell 2000, the bottom panel out here, we can see how it has stopped at that 1151.70 area. So you've got to have all four of these equity futures contracts on the same page. Now, granted, they're on my same page, but they're not on the same page with regard to breaking through resistance. Now, if the Russell 2000 on a 30-minute basis can close above 1151.70 and the Dow equity futures contract 22,143, then you've got something to talk about. Right now we have something to talk about, and it says, not so fast out there, not so fast. That's just coming from the message of the 30-minute time frame charts. Now, somebody might be looking at this and saying, man, it looks like just really a great rally. And then Steve-O would say, really? How could you come to that conclusion? If we take a look at the equity futures contracts, all four of them, are any of them above the highs from last Friday? Or in the case of the Russell 2000 last Thursday? And the answer is no, they are not. So now we're not above any highs out there. That's not like this is a big gargantuan deal. And the markets are just getting ready to explode topside. That's not the message that we're seeing inside the markets. I'm not saying they're not bullish and that they can't continue higher. I'm not suggesting that you short the markets here. What I am suggesting, most important thing, don't get caught up into the dollar size of these numbers, but please learn to be able to easily, objectively identify support and resistance, just like we did on those 30-minute time frame charts. It'll help you immensely. Steve Rhodes with TFNN. We'll be right back.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, Taz understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the Taz Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the Taz Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today. TFNN is launching an open house for our Tiger's Den. For a limited time, you can get a 30-day free trial to the Tiger's Den. Just enter promo code OPEN at checkout and pay nothing for 30 days while you try out your Tiger's Den membership as part of our open house. With market volatility at an all-time high and people all over the world working from home if possible, TFNN is hosting an open house in our Tiger's Den. The Tiger's Den is an interactive chat room that runs all day where other tigers and tigresses discuss trading ideas with the hosts and members, along with charts and current market news, as well as live access to the charts the hosts use during their programs. Join us for the Tiger's Den Open House. Begin your Den membership today by just entering OPEN at checkout and pay nothing while you try things out for 30 days. For all the details and to start your Den membership today, visit the front page of TFNN.com. Don't miss out on the TFNN Tiger's Den Open House taking place now. Sign up today.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow's up 485. S&P is up 66 points out there. Let's go to one of our first questions. This one coming in from, I'm not sure who. Bill. It's coming in from Bill. Bill says, hey, Steve, I'm short, ticker symbol COP, ConocoPhillips. Let's go ahead and put that chart up here on the screen. At the current price, what's your target for a short? Thanks. So one of the things that, Bill, you want to take a look at here, if we take a look at the daily time frame, daily, weekly, monthly, we can see the current profiles. Now, there's a brand new profile that formed on the weekly time frame. So if your short scenario is correct, this would say the target to the downside would be 24.87. We can see that price here had rallied up to the center of its bullish structured market profile. Now, of course, once price closed below that profile, which was really the day that it formed, that was on the trading session out here of March the 16th. Oftentimes in a counter trend rally, what I've noticed is it's not the bottom of the box that becomes resistance. It's that center where there's both buyers and sellers in that level. So I would say, first of all, your stop should be above 31.98. On the short. That has to be your risk, or it doesn't have to be, but I would suggest that that's your risk. And then your reward now has got to be the 24.87. So you've got to do the computations to determine whether the reward risk is worth it to be short ConocoPhillips. Maybe it is. Now, let's go take a look at my other tools out here and see what we can see. And first, let's just start with the monthly time frame. Now, in the monthly time frame, once price closes below a breakout level, and the breakout levels are established by the red horizontal lines, you'll typically go to the next level. So this month here, the month of March, once price closed below 43.48, it said you go to the next level. That next level was 41.08, then 35.99, and then 26.88. 26.88 was level of support at the 2009 bottom, and at this stage here, you're trading at 29.45. It is also another level of support. So the monthly and the larger picture out here, Bill is saying, be careful. That's what the monthly time frame chart shows. What's the weekly time frame chart show us? On the weekly time frame chart, what this shows us is a bottoming pattern. The bottoming pattern is the TD 9-count bottom. Bar number 9, 2 weeks ago, well, that was bar number 9. That was, for all intents and purposes, that was the bottom. There's also, I can see A to B equals CD down patterns. And last week was a bullish engulfing. So you've got I can't draw the A to B equals CD on this version of Ninja Trader, but you can visually see it yourself out here. So now you've got two bottoming patterns on a weekly time frame for ConocoPhillips. Let's go see what the daily time frame chart shows us. The daily time frame shows wave number 7, letter G, and a TD 9-count bottom. Was the bar following bar 9 and a Rhodes momentum indicator bottom. So you've got 3 for the price of 1 today. 3 for the price of 1 on the daily basis is bottoms. Now, doesn't mean that price won't pull back. You asked me the question. We took a look at those market profiles. Where could price pull back to? We gave you a brand new weekly market profile on the daily time frame. I don't remember what that number was, but on the daily time frame, if you're asking me where it would pull back to and still maintain its bullish patterns that are in place at the moment, it would be 25.73. So those would be the levels, Bill. I hope that helps you out there. But you've got bottoming signals on the daily, multiple, on the weekly, multiple, and the monthly has held a key level of support. So I would have a relatively tight stop on that. Now maybe you're thinking, hey, I'm going to take the short position because oil is just falling apart and it's going to go from $20 down to 0. We could only wish that were the case out there. But actually, we don't really wish that were the case. That would be major problems out here. In the case of light sweet crude, price continues to move lower and does so with less relative energy, very much like we took a look at on the chart for ConocoPhillips on the day. That was the bottom, one of the bottom patterns that it formed out there. If you see a bullish reversal candle form inside of light sweet crude, to the extent that it and ConocoPhillips are going to be directionally correlated out here, then you would jettison that trade altogether. Or you might flip it to the other side, Bill. You might say, okay, I'm going to go from being short to long. I mean, you really have to evaluate that. But to the extent that you're allowing light sweet crude to influence you, be careful because if we do see a bullish reversal candle, I'm not referring to today. Really not that it can happen today, but I'm not really referring to today. More so referring to tomorrow, or perhaps the next day. That could be a sign of a bottom out there. So I hope that helps you out. Thanks so much for writing in. Let's go to our next question. Next question coming in from Tom G. And Tom says, I'm looking to get into the junior nugget and nugget, both long positions. What do you think about the GDX? Also, I'm really watching oil on UCO. So, okay, cool. So we kind of get two birds with one stone, so to speak. So we've covered the oil thing, Tom. I mean, watch to see. I wouldn't do anything now. I would watch to see if there's some type of bullish reversal candle that forms, and then that would give you that entry into UCO or oil. With regard to the GDX out here, let me do the same thing that we normally do. Let me put the GDX just so you can see the different profiles. And what Tom's going to do, what I would recommend that you would do as well, would be to trade the those triples or doubles, whatever they are, off of what the GDX is doing. Take the patterns from here. So we know that the GDX formed a nice Gartley buy pattern, nice A to B equals CD to the downside. It did that with that piercing candle that formed out here on March the 16th. So I'm going to go ahead and turn off the A to B equals CD to the downside. We know that price had made the 0.618 retracement, and right now is retracing into a little gap out here from March 24th. That had 127 million shares, Tom, to the upside. And so far you've tested and rejected that level of 23.79. You're 23.84, and the volume today is only 20 million shares. So in the old days, Stevie would use that gap, and you still can use that gap It's either the top of the gap, which would be the top or bottom, however you want to look at it, the high of March 23rd, that would be 23.29, or the low of March 24th, and that's the 23.79 level out there. So, you know, if price closes above 23.79, you'd have a failure at a breakout level. So that would be one thing to consider. Brand new weekly profile that formed, and price is below the bottom of that box out there. So maybe your entry into it is not just a test and rejection of a breakout level, but would also be to see price begin to close, start trading about 24.01, the bottom of that weekly profile out there. And let me pull over my other charts out here, Tom, see what we can figure out for you. I'll level here. Here you can see the piercing candle. Again, I can't draw the A to B equals CD, but we have that on the other level. Another area of a potential buy for GDX would be 23.46. That's Stevie's red line. Now, Tom, that's going to change by pennies or what have you as price moves up or down, but you've got a guideline out there. And if price were to close below 23.47, that would be suggesting that you stay away from the long trade inside GDX, because that would be suggesting that price could pull back further. And we say pull back further. Let me move this off here so I don't lose it, and let me get rid of these retracement levels out here. And further would be 21.69, maybe even 17.56. So I think you've got to watch at 23.48 on the daily time frame chart out here. And the weekly time frame, what do we have out here? Not much, not really much for me to be able to add to the conversation. So that's what I see, Tom. Focus on the daily time frame chart. 23.48, that could be your entry point. Close below that, not so much. Steve Rhodes with TFNN. We'll be right back. I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools, as well as provide great market calls too. Sign up today.
If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Let's keep with the questions out here. The next one coming in from John G. And John wants a buy price for Microsoft. So we know that Microsoft completed a to B equals CD to the downside. That's drawn in on the daily time frame chart out here. It did that when it created this little Morningstar candle out here. That was this set of candles from March 20th. The low on March 23rd, and then the candle that made up that Morningstar was the March 24th. So you want to take a look at, and there was also a bullish Pierce bull sash candle out here on the trading day of March 17th. So you have multiple confirmations of the 1-to-1 A to B equals CD to the downside, John. So in essence, your buy point would have been on the trading day. The entry would have been here on March the 25th. That would have been one option. The other option would have been an entry on March the 18th. Now what we can see on the daily time frame is that price is above the bullish structure, the center of the bullish structured profile, 157.50. Now, ordinarily what I would say to you is, hey, if you want to jump on the gravy train right now, now would be the time, because you're above the center of a bullish profile structure on a daily time frame, and price should make its way to 172.50. And in fact, that is what that message is to you and I. However, we have to really keep this in perspective, and the perspective is, well, what's going on the weekly time frame? Earlier in the show, we were taking a look at market profiles, and what I had mentioned is that when price closes below a bullish structured profile, counter trend rallies tend to make it all the way up to the center of that box, not the bottom of the box. Now, I believe we were taking a look at a daily time frame chart. John, you and I right now, we're more focused in on the weekly time frame chart. Because in the weekly time frame chart, that's where we saw price move down, move lower, get below the box. And right now, the center of that box, let me pull this little data box over here so you can see it. The center of the box is 159.82. We're trading at 159.73. So this is actually, you're asking for an entry point, and if this is the extent of the counter trend rally in Microsoft, basically this is where it should end. So if price can close above 159.82, you can't get in on those earlier prices. You know you've got resistance at the 172.50 area, 169.31 to be actually between 169 and 172. That would become your price target. But if price does pull back here, if this is a counter trend rally, markets are getting ready to pull back a bit, you use Microsoft as a gauge, the level where you'd be looking for Microsoft to pull back to, the ideal level would be Stevie's red line. Now, I'm not sitting here saying that's what's going to unfold. But if you were looking for the buy price would be about 147.23. That number's going to change, John, as price moves higher, lower, or what have you. But in essence, it's Stevie's oscillator on change line. It's a tool that I teach folks how to use. Again, there's a workshop on my members page for subscribers, so you might want to, if you're not a subscriber, you might want to consider doing that so that you can use that for your gauge out here. You can do your own calculation. But that would be the entry point that I see here in Microsoft on the daily time frame. We can also see not only did it make an A to B equals CD pattern, it did it with wave number 7. That's letter G on the bottom of my screen. Oftentimes wave 7 is a top or a bottom inside a market. If we look at the weekly time frame, we can see that where price found support was at a breakout level. This is the TD 9-count breakout area of 135.61. No other pattern other than just price pulling back to support. It topped with a TD 9-count pattern. It was on bar number 8. The weekly chart is suggesting that if it can get past that hurdle of the center, then it should find resistance at 165.66 or thereabouts, obviously. And that is where we'll determine the weekly basis whether this is just a counter trend rally, Microsoft being one of the stronger stocks out here, because that's going to be a real resistance level. So thanks for writing in. I hope that helps you out with regard to Microsoft. Learn those other bottoming techniques out there, and that way that could give you an early entrant into the stocks that you're looking for, John. So again, thanks so much for writing in. Next question coming in from Bill. A different Bill, I believe. And this is for ticker symbol. Let's start off here. For Sting, STNG. I don't know what it is. It doesn't really matter. To you and I, it really doesn't matter because we just take a look. We're agnostic to the symbol we're looking at. We're just looking using the same tools and trying to identify what is the message of the markets. The question is, I'm long from 15 and looking for upside targets. This is Scorpio Tankers. So, Bill, let's see here. We've got the nice bottoming pattern out here. That was a Rhodes Momentum Indicator bottom, bull sash candle last week. Prices above Stevie's red line out here. Now, we're going to go look at profiles. But one of the targets out here would be 33.77. It's got such a long way to get up there that I hesitate to give you that as a target, but it is a target. Instead, Bill, what I'd be watching for is today is going to be bar number 6 of a potential TD 9-count pattern out there. So you're going to want to watch it. If this continues to extend, bar 7 would be tomorrow, bar 8 the next day. That could be a top, or bar 9 or 10 the following days. It's bar 8, 9, or 10. When those are the highs, that can be at least a short-term top out there. On a weekly time frame, let's go take a look at it, see if there's any patterns out here. What did it do? Stevie doesn't have much. 22.15 on a weekly level is going to be a resistance, a key resistance area. That is likely where price is headed to. Remember, when Stevie's line, the oscillator and change line, changes color, in this case here on the weekly chart, went from green to red, tells you and I that there's a meetup. There's a cute, sweet, there's a meetup of price and it. And right now that's at about the 22.15 level. It's more than a meetup. It's a meetup, and sayonara, see you later, baby. I'm moving to higher price if price can close above that level. But if not, that becomes your danger point. So you're in at 15. I'm going to say in that 22 area is the place to really keep your eye on with regard to Scorpio tankers. Now, I do want to at least give you what the current profiles are, because on the daily basis, the level I gave you was the TD9 count breakdown level. And that seems so, pay prices above the top of its daily profile at 2017 and just slightly above the top of the center of its profile at 2038. We just had a long discussion about that. We won't. You're trading at 25.65. So a nice close above that 2038 is then also suggesting higher price. In this case here, it's the 25.65 level for you. I don't remember what the weekly oscillator and change line was, but the lower of the two is the one I'd really be watching, the OUL level more so than the top of this profile. But those are your price targets, and I hope that helps you out. Hector and the fuel injectors, he writes in, he says, is the Dow getting ready to jump the creek, going upwards? Sorry if you've already covered this. I did cover it. Let me just give you the quick synopsis here, Hector, and that is really just understanding resistance. And resistance, just short-term resistance. If price can't take out short-term resistance, that's the 30-minute levels out here. There, I don't care whether you want to go jump creaking, jump in the creek, jump creaking. What the heck was that? Look. For me, I just try to simplify this in ways that everybody can understand. I don't know what it is that each of you might do physically, whether it's working out, whether you're curling, lifting weights, whether it's some exercise or what have you. But you know, to the extent that you do it consistency, you know when you begin to run into resistance and when you're going to be able to bust through it or not. Here we just let price tell us. And in the case of the Dow, if it closes above 22,143 on a 30-minute basis, then yes, it says it wants to move higher. Until then, we don't have any uniform message in the equity futures contracts for their 30-minute time frame. Always dangerous. Great.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the tax opportunity zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. So we got a question to Dan to take a look at the profiles, market profiles out here. And here, the pages that you and I are going to look at have Stevie's synthetic version of the equity futures contract. This allows me to stitch the contracts together and then also to be able to use a tool that I have to take a look at the market profiles for these different time frames out here. Now, the different time frames that we're looking at are daily, that's in the upper left, weekly in the upper right, monthly in the lower left, and quarterly in the lower right-hand pattern. Now, the new profile that is formed is on the weekly, so you're looking at the upper right-hand panel out there, and it's a new profile that just formed this week. Now, the bottom of the box is above price. And that level is 27.7975. If you're going to ask me if this is just a counter trend rally, where is it that the ES Mini would target in price? It's 27.7975. Typically, when a profile forms above price, it's bearish. And price maybe will make its way up to that level. Now, I have seen plenty of times on profiles where this occurs. Price then gets above it, closes above the bottom of that box, and then that turns into a bullish situation. But right now, 27.7975 would be a target level for a counter trend rally to end. If today was the bottom out here, then the A to B equals CD pattern is at 29.05. So that's well above the 27.79 area. I'm not saying that it's made that the equity markets have made an A to B equals CD to the upside. Just using the current data to identify what that might look like, and really was to see, does the A to B equals CD in essence punch out at 27.79? It doesn't, But that's your new resistance level. What else? If tomorrow at the close, the ES Mini can close above 2641, 2641 or 2640.75, its monthly bullish structured profile will have held. And its quarterly, we've got the quarter ends tomorrow too, will have held. And all that will have said was that price just simply pulled back to test key levels of long-term support out here. And it also says that the bullish trend remains in effect. That's just one of the things that this would be signaling to us. Now, inside the NQ, because I'm using my synthetic version of the contract, its profiles are different in the NQ than when we took a look at the June contract, which are right. They're both right out here. But this one's probably even more right. How can something be more right? Well, it's just got more data than the June contract has in order to be able to put together those battle lines, those levels of support and resistance, and then the in-between where everybody likes to party, the center of the profile. If you take a look at the current daily profile, that's the upper left-hand corner for the NQ, and you take a look at where prices stop, that's a bullish structured profile. I don't make this stuff up when I say it to you. I don't just pull it out of my you-know-what out here. I don't have any. Why would I do that? Bullish structured profile. Where did price run into resistance on Thursday? Where did it run into resistance on Friday? Right there at the center of that box. So what that also tells us is this 78.97 level is really key. In fact, it's way more key than me just flipping back here to take a look at the current daily profiles. Totally different profile setup here inside of the NQ right now. They're both important, but really when we come back and we take a look at all the data out here, this daily set of profiles is really more important out here. So price, if you can get a close above 78.97, that would say we should see a move up into the 83.63 level. Now the difference in the NQ versus what we looked at inside the ES Mini is it has formed a new profile, but price is within inside that box. This is bullish in structure. This says that real key level of support on any pullback should be 72.52.60. Let's say we get some terrible news between now and then, whenever then is out here, and you see the NQ pull back to 72.52, that could be or should be your entry price. Close below that, though, hold on. We probably go back and we revisit the lows from last Monday or worse than that. But you do have at least the NQ, and I'd really be focusing in on the NQ. The two levels we're going to focus in on, 79 or 78.90. Let's just really call it 78.98. A close above that should go ahead and move price up to at least 83.63, perhaps even higher than that. That's the NQ. We go take a look at the Dow Equity Futures contract, and it is replicating right now the weekly profile of the ES Mini in that it has formed above price. So if you're going to ask Stevie, where's the counter trend rally end out here, we would use the bottom of that weekly profile, and that's at the 23,740 level. If you look at the quarterly profile, all price did was pull back to test the bottom of its bullish structure, and that was at the 18,161 level out here. The monthly profile, not going to do us a whole lot of good. That is your lower left panel out there. So, Jay, here's your new profiles. Nothing that I can put together for the Russell 2000, but there's your three for the price of one. Let's go take a look at that spot volatility index out here. Right now, it's trading lower by about 10.41%. That's the one-day rate of change. However, and even if we do get a one-day rate of change less than minus 10%, which typically is an initiation move signal, I wouldn't be comfortable making that statement unless price close below its 50-to-1 Bollinger Band. The 51 Bollinger Band reading right now is up at 57.34, 57.34. The spot volatility is trading at 58.66. If there's a close below that upper Bollinger Band, 57.34, that number may change by a penny or two during the day. If price can close below that, what it is signaling to you and I is that it wants to go take a run for that 50-day exponential moving average. And that's the 41.81 level. So in order for the spot volatility index to give you the signal, in my opinion, to give you the signal that the markets want to move higher out here. You go back to those short-term time frames, the number I gave you for the Dow, you want to see price close above that. You want to see the spot volatility index close below this 57.34, and that should give you a run down to the 41.81 level. If the spot volatility index does not close below that upper Bollinger Band reading out there, it just simply says caution. It simply says caution. Could be a lot of caution. I'm taking a look at the, what else am I taking a look at out here? Oh, the global flow of capital. Let's take a look at this over the past, since the bottom that has formed. We've got a worldwide, at least rally or counter trend rally that's in place. You and I are wanting to track where is the money flowing to, what is performing the best out here. The actual best performance so far has been inside the UK. In terms of dollars, it's up 19%. The Dow is up 18%. Now, I don't have the NQ or the NASDAQ 100 or the S&P up here, just really using the Dow, because when it comes to the global flow of capital, it's really the Dow that we want to be able to track out here. You can see in Australia, which had a nice move overnight, up 11%. Canada, so North America is doing well, up 17% out here. India, about 14%. Same in Germany. Japan, 13%. So all this is still suggesting that you've got this counter trend rally. What we're looking to see is, does the Dow start to pull out in front? If the Dow can really start to pull out in front, that's going to tell us that this big ball of capital that floats around the globe is positioned over the good old US of A. It will position itself. Just we can't make that call right now. We'll be right back.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks and commodities, along with specific recommendations including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The gold report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. So the next question coming in from Joe. Joe, I love the email, ACK. That is the call letters for flying into Nantucket Memorial Airport out here. But the question is, where is support and resistance for AT&T? Ticker symbol is T. So on a daily basis out here, I don't really have a bottoming signal for you. Price is trading above Stevie's red line, 29.66. If you begin to see AT&T close below that red line on a daily basis, it's telling us that it wants to go ahead and pull back further. Now, the problem is that price is below all profile levels, whether it's daily, weekly, or it's monthly. So I don't have an area where price would pull back to. The only support level that I have for the daily time frame is going to be Stevie's red line, and that's about the 29.66 level. So closing back below that on a daily chart, which you could go back and revisit the bottom, tag the swing point, something along those lines. But let's go look at the weekly time frame chart, see if we can identify any kind of support. And unfortunately, the answer here is no, I don't have that either. So that is a bummer. Now, on a weekly basis, I do see an A to B equals CD to the downside. That was because of last week's piercing candle, bullish piercing candle out there. But I don't really have support, which is one of the things you're wanting to know about. Resistance is in about the 34.87-ish area. That's Stevie's red line on a weekly time frame. Let's see if we can find some support for you here on the monthly. And the monthly, it does show up. And the monthly is 28.92. And as long as price closes above 28.92, that was really suggest to me that what we looked at on the weekly chart, that price should continue to move higher in the daily as long as price stays above Stevie's red line. So areas of support for you are really coming off of the monthly time frame chart, 28.92, 28.51, 24.72, and worst case scenario, 21.75. So I hope that helps you out. Joe from Nantucket. Maybe not. I might be kind of embellishing that. But folks, stay tuned. I hear the music in my ear. You know what that means. 2 more great hours are coming up. You've got your favorite polar bear, David White. He's up next. Tom O'Brien to take it on home from 3 to 4. And I'll be back with you on Terrific Tuesday. Have a magical Monday, folks. Thanks so much for being here.